All right, let's jump into it. We're at 18th of September, 11:38. So just had Aussie employment data out, and pretty much sort of goes to show that they're back to swing and a miss with their 20K predictions every month and minus 5.4K. I mean, the slight little plus, if anything, for this at the moment is that unemployment rate is still stable at 4.2%, but still, again, look, they just spam 20 every month and they just fluked it last month and they got it pretty close. But seeing Aussie come off there a little bit, but look, I mean, this is, excuse me, this is always sort of like, something that'll move Aussie a little bit. But of course, the big thing is the FOMC from this morning. Well, overnight, depending where you are. But from this morning, that was the big sort of mover with it all. So I won't go over too much of the data sort of throughout the week because, I haven't really sort of seen a great deal. We had retail sales actually, which beat quite substantially the other day, which of course is a little bit of a tick for US dollar strength. Not that it kind of it kind of helped it at all, and it actually took out yearly, or I guess that's actually, it was already a multi-year low, so multi-year lows, but certainly this year's low. So going back to the lows we put in July, so took out those lows and springboarded up there a little bit. So I'll get onto that with the charts in a moment. But look, pretty much as I said, the FOMC was the big sort of ticket item that sort of the market's been building towards. Highly called or forecast for 25 base point cut. Um, that's what they got, and it seemed a bit of a sort of maybe a bit of a turning point, even if it is just a bit of a sort of medium term cooling correction with a few of these markets. Equities seem to have shook it off completely. Not that I really sort of cover equities a great deal on this, but certainly gold sort of flew around a lot as that data was coming out. That was some pretty hectic sort of price action there. Like we're talking sort of within, you know, 1 minute candles, so 3 or 4 1 minute candles was like up $30, down $50, up $50, and then settled and eventually sort of settled and broke to the bottom side and that. So look, a couple of sort of Powell sort of comments and that, basically sort of in regards to sort of like well, not in regards, but in the press conference and that, but in regards to the sort of Fed's kind of outlook at the moment, is that well, the big takeaway for me is pretty much what I have been sort of saying, that inflation, like, because they've got the dual mandate, where they've got to sort of, and he stressed this over and over, as he typically kind of does, which is, that's what their job is. They've got the dual mandate to sort of, keep employment stable, and inflation in check, basically. So not let inflation run out of control, not let the jobs market get absolutely hammered. And I've covered this a couple of times, but the reactions that the Fed can well, the levers they can pull, the tools at their disposal, however you want to call it, um, reactions to these two problems are drastically like complete polar opposites. If inflation's going up, you typically, you know what I mean, you raise rates and that, or you at least hold rates higher to stem the flow of sort of like cash being spent and reduce the cash in the system. But jobs, which is the one that's sort of come to the forefront recently, if that's sort of failing, well, how do you solve that? Well, you kind of, you stimulate the economy, and how do you do that? You do that by lowering rates. So you can see that they're in a bit of a sort of tough position at the moment where, you know, basically sort of like they've got, this is what's kind of stagflation is. The data isn't too bad out of the US, but the thing is the jobs market has been sort of dwindling a little bit, and inflation did actually tick up. And I think the big takeaway from this, apart from that long sort of ramble just then, is that sort of he sort of clarified that although they've been looking at jobs and that's been at the forefront, they're not ignoring the other mandate, the dual mandate, the other one, the inflation. And I think that is what really kind of sort of solidified a little bit of the sort of sell off in gold, a little bit of the sort of bounce in the US dollar, because everybody's been sort of so hard fast on it's all about jobs, all about jobs, all about jobs. And the jobs numbers have been weak. We've had, recently we had ADP, the JOLTS, NFP, all pretty bad numbers. The big, massive yearly revision down 900,000 jobs, which on that point as well, he said, oh, that's about what we expected. So, I think that kind of almost like, no, it doesn't nullify, but it kind of does sort of, you know what I mean, sort of takes the sort of dramaticness off it. If it's kind of like everyone's like, wow, that, I mean, 900,000, that's like half the jobs that they thought they created over the whole year. Just they didn't. Like, oh yeah, that's about on point. Okay. Well, I think that's something that maybe, if you can unpack it a little bit, you can sort of take it forward with a couple of the revisions and that sort of moving forward, over the next year or so at least. But the big thing, as I said, was the fact that it's sort of like they're like, oh, look, we're not ignoring inflation, and the idea that that's sort of ticking up is something that we may need to, we need to contemplate. And for that, obviously, it sort of puts them in a bit of a predicament because, as I said, the reaction to the two issues that they have, the two mandates, the jobs dropping and the inflation rising, um, kind of puts them in a situation where they're kind of like, okay, well, let's see which one gets worse. If inflation really ticks up, well, then we're going to sort of see, potentially that they sort of reduce the amount of times that they cut, and obviously sort of possibly add a couple of holds in there. So I think sort of pretty much their price, you see different reports on that they're priced for sort of maybe 225 base point cuts and that through to the end of the year. Some sort of saying one. Of course, you've got the dot plot, which sort of breaks it down as to sort of how many Fed members. Well, basically, it's a plan that they sort of think, okay, we cut here, we cut here, we cut here. So you can get an idea about how many cuts the majority of the sort of Fed members think they're going to have sort of moving forward. Just on that as well, there was a new guy, Mandan, I don't know, something starting with M. He was just added to the Fed, and he was a Trump sort of appointee, and he comes out saying, yeah, we should cut 50 base point. Well, big surprise, right? There's no sort of shocker there. He did, Powell was asked about this, and I think he kind of sort of shut it down. He's like, look, we add people all the time, and, just because one person says they want a 50 base point, that doesn't mean anything. You need to be able to persuade the rest of the board or the Fed members and that. So that was kind of really sort of shook off a little bit in that. But just on the jobs factor as well, he was sort of saying that the jobs potentially the reason that they're sort of like dropping so much at the moment is due to their sort of tightening of the immigration. So it's almost sort of like that if this kind of is a pullback in the jobs numbers and that due to the immigration, as he said, that that is obviously a shock effect because that's just happened, that's just been tightening up. That may sort of stabilize moving forward. Not necessarily, that's just my thought on it. But he did also note on that unemployment isn't rising. So it kind of goes in line with that there, that it's sort of like, the jobs numbers, so NFP, ADP, these kind of things that are being added, that's reducing, but it's not like, okay, those people are not hiring and then more people sort of out of a job, hence their unemployment, that would be rising up. But you said unemployment's not sort of really rising. We did see a bit of a tick up on last print. We'll get another one later this week, which I'm just having a look now at 241. They're expecting, well, tonight now. So we'll see how this one sort of comes in here. But, they sort of say unemployment, like percentage wise and that, isn't sort of rising and that I mean that's not necessarily something that's going to be a continued ongoing effect with it all. Just having a look through a couple of the notes here. So basically, no interest from most people in the 50 base point cut, despite what I just said before. That other guy sort of coming on board. Um, so low hiring, low firing. Okay, yeah, typical sort of stuff. Looking, they're going to be sort of data dependent moving forward. Again, that idea of look, there's no risk-free path, and this goes to sort of what I was sort of saying that sort of you're facing the two mandates that you've got to address. Both of them are not particularly in a great position at the moment. Both, if they were the only one in issue, it would be a lot clearer. It would be like, okay, well, inflation's up, jobs are strong. Well, we hold rates, clear. And vice versa. If inflation was down and jobs was struggling, well, we cut rates. Bang, that'd be easy. But of course, as he sort of said, use the term in that it's a no risk free path. And it's sort of to that sort of note on the inflation side of things as well. I think he we had okay, so you got sort of like the whole sort of thing about inflation more recently has been tariffs, 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 and who's going to be paying the tariff? Who's going to be so? Where's the is there going to be an inflation showing up? And from what it sort of seemed through a couple of the questions as well, it sort of seemed that the inflation obviously we saw it pop up a little bit, at least one of those prints at PPI. Which is basically think of that's like the wholesaler. So you've got the people that are selling it from overseas, you've got the consumer, and then the person in the middle, which is basically the wholesaler. And they're saying that at the moment they're absorbing that tariff, but he's not 100% sure that that will continue to happen. And obviously, if that happens, they'll then pass that on to the consumer, and that's where we'll see CPI rise. And I think that's the question at the moment is like, although sort of like, CPI did tick up a little bit, PPI actually came back down. But we did have that big flare up last month, or not latest print, the print before, where it shot back up to 0.9%. We did come back down afterwards, but again, that's the idea that that sort of may be something sort of moving forward. I mean, all in all, sort of, I think, sort of, last little note that I've got, actually, not the last note, but took a lot of notes in that. But, you know what I mean? It's saying the economic activity, despite weaker job numbers, is still quite strong. And that's the thing that sort of like, if they're sort of thinking that, hey, look, we've got, you know, uh, lower employment, like lower jobs being added, and then that's showing up in, a lower GDP, retail sales down, these kind of things, well, then you've got a bit of an issue. But whereas I think it's sort of like, again, going back to that idea that this is just a maybe, uh, he didn't use the term, and I don't like the term transitory, but the idea is that it's just going to be a little bit of a recalibration. Is that okay? Yes, there's lower jobs being added, but it's not affecting the numbers. You're still seeing retail sales, which came out, as I said at the start here. Where are we on Tuesday? Yeah, Tuesday night here. Retail sales are still up. GDP is still forecast to be positive. So they're still producing okay economic data, and people are still spending despite the lower jobs, in theory, being sort of created. So yeah, it's a bit of a question, and I think the takeaway, not even the takeaway, to sort of sum it all up, is that it's not as clear cut as the market has been pricing for. They've been absolutely bashing the hell out of US dollar, because he said jobs is the main thing, and the jobs have been pretty bad. So that's stands to reason. But now the thing is the jobs are still bad, but that's not the only driver or the only bit of data to look at or to sort of put into the equation moving forward. And I think that's why we're starting to see a little bit of a peeling off of maybe some of those US dollar short positions because it's not so clear cut moving forward. Because, if you play it out, what happens if the jobs are in a sort of stable, they stabilize kind of thing, and inflation is persistent. Well, as I said at the very start, the reaction from the Fed in that regard would be to hold rates, and that's obviously not dollar bearish. So that's why I feel that sort of probably we're seeing a little bit of a squaring up of those sort of drastically short dollar positions across the board. All right. Anyway, so that was a whole heap sort of to go through in that just on FOMC. Looking forward here, we got Aussie data, as I said at the very start of this. We got employment rates flat. We got unemployment change ticking back down, negative 5.4 thousand. And this is the spam. I cover it every week and that, or every month, sorry, but it's always 20s, 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 a blind shot. They never get anywhere near it. They got pretty close last month, actually. That was actually very close. Even sort of with the revision, they were still almost in the money. But, it's that old sort of broken clock kind of thing. So, Aussie's a little bit under pressure with that. It is actually pushing down into a bit of a support zone at the moment, but a break underneath this area, and this is the thing, it's now falling back on the idea of what the market's going to do with the US dollar. But if we got a little bit of a sort of weaker turnaround from Aussie data, it's not going to necessarily shake it, but weak Aussie data in that regard, it's a bit of a mixed bag because unemployment is flat. And the jobs added are obviously negative. So, this is dollar bearish. This is actually, kind of Aussie dollar bearish. This is kind of, I would say, still a win. If this were to tick up, we would have seen Aussie down another 20 points or so. But in saying that, if we do see US dollar run, which is at this moment sort of breaking to its little session heights, excuse me, we could see this move back down at least to a test of 66 or 65.80, the next levels. But obviously, I'll get to that in the chart in a moment. Later on today, what do we have? Anything of interest? Not really. Foreign direct investment, that'll be interesting to sort of see. It's not exactly a market moving sort of thing. Of course, it's tentative. Can't stand those sort of ones. On with more of the sort of rate decision. It's a big week for this actually because obviously FOMC is the big one that everyone was looking at. We also had BOC last night. They cut 25 base point. We got BOE tonight. They're looking to hold. So obviously maybe a little bit sort of stronger for them there. Unemployment claims is probably more what I'd be sort of paying attention to here. I mean, BOE definitely. I mean, particularly if you trade pound pairs, or sterling pairs, but yeah, I don't. So I'd be more looking for these numbers here. They're sort of manufacturing, which has been quite weak. Expected its little tick up, but still quite weak, and unemployment claims to see again, is this just a blip that sort of came up here? Because if we look at the last numbers, fairly stable in the 20s, 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 30s, slowly moving up. If you have a look on a little graph, it's this is a big spike up. We did see a spike back, where's this, October 24, and then obviously sort of dwindled down afterwards. So it could be the start of something to sort of say, hey, it's moving up, or it could just be a quick outlier month in that. And again, maybe on that sort of immigration kind of sort of stuff. And of course, tomorrow we got BOJ, and of course, they're probably just going to hold there. So that's a big question mark for them, but they always talk the talk, but super, super, super slow to actually act on anything. All right, so jump onto the charts. Let's sort of start up with, look, I'm on Aussie, so let's start with Aussie. We did actually sort of reach that top side target there, and geez, I honestly didn't think, like, when we were coming back down over here, so I've covered this a couple of times. I'm not a fan of these megaphone pattern things. To me, they're hit and a miss. Anyway, regardless, when we were down here, I was like, wow, I guess the target's up here. Ha ha ha. I got that wrong, very wrong. And obviously, sort of once we jumped up over to here, we could start to see that okay, this is where they're going to be taking it to. And really, it took a little bit of a last little push to get through here, but hit that top level over 67, and as you can see, bang, rejected down quite strong there. So on a daily, overbought, moving back down. As I said, underneath 66, 66 probably an area that we'll probably see a little bit of error. Let's get into a lower time frame. So this is a little support area that we've got through here. Little downside targets after this is around that sort of 66 is the round number, and then obviously 65, 65.80 into this level here. Pinpoint ones, that's what we haven't had for a while. So you can see this is obviously an area in which the market's been sort of holding it. Likewise over here. Whoops. And this is what we're doing. Just going back to the sort of the old school sort of structure with this. And this is predicated on obviously a breakdown underneath this zone that we're in right now. Because like we've got the bias here, it was a pretty straight cut straight up through here. This is off, I can't remember now. So some of the data from last week. I think this was off the job cuts from unemployment numbers from the US last week and got that big push up over there. So we've had a little bit of support here at 66.30. You can see that the buyers are going, okay, cool. I've got another shot at it here. They're going to try and hold this. Should this not hold, this is where we'll be coming down. And this is where we're pretty much sort of coming back down. As I said at the time, I think that, generally these sort of like big moves like this, if they're going to come back, it's a good target for the body fill. So 66, 66.03, in change. That's your target. Should we get down underneath this little zone that we're in right now? Most likely, I mean, look, this is quite a big move. Actually, you have a look around the data when this came out. This thing shot up to the top side here. But as you can see, it kind of really only lasted there for a little bit. It sort of smacked back down during the press conference, uh, bounced around. Obviously, just sort of basically like if you had just ignored the whole thing and woke up afterwards, you would have seen it's pretty much back where it was. Oh, nothing. But, this is a fairly decent move. 70 up to, it's about 30, 40 points up over this side here. But then, of course, so up 0.5%, down 1%, and it's just sort of settling to the downside now at the moment. Could say that this is a little bit of a sort of negative divergence. 15-minute, not interested. Okay, oversold on the 1 hour. We could see a little bit of a bounce around this area here. As I said, look, US dollar may sort of see some balancing, but it's not like, okay, as I said, the jobs aren't an issue. Jobs are still an issue. It's just that they're not the only issue. And that's why we'll see a little bit of a balancing of the US dollar across the board, which warrants these things to cool down a little bit. It doesn't mean necessarily we're going to be coming back down over here. In saying that, though, if this seems to ring true, well, don't put your target down over here or something like this. I don't think that's the case so much. But as we sort of have a look at it, the little sort of rough raw sort of thing. US dollar is pushing up a little bit. That's pushing this down. Let's have a look. What's one doing? One's pushing up a little bit. That's sort of weighing on it a little bit here. Whoops. Stuff all around. RBA, look, if it has to be either be up or down, short term, that's a little bit down there because the weaker numbers would be more in line with them going, hold on, wait, maybe it is a little bit restrictive. Maybe we need to continue with our cutting path. That's the thing, because CPI was so high, and the same sort of thing you were seeing over in the US, it's actually quite interesting. It's only exacerbated over here. We're actually getting negative numbers. I suppose, if you adjust all their ones, they're negative as well. But in the print, they had 22,000 or something over 350 million, which is pathetic. But still, negative 5,000, unemployment is still flat, but CPI up. So CPI up would require, as I've covered a couple of times here, a hold, which is Aussie positive, but jobs weaker, and that's what we've just had right now, would be a little bit of a sell down there. However, risk appetite is still very strong. Equity markets shook that thing off like they didn't care. But an interesting sort of thing with this is we're actually seeing the ASX come off a little bit at the moment. So it's not an easy read. It's not an easy read. One of the other notes that I took from what Powell said overnight was, most forecasters would have low confidence in their forecasts right now, and basically just sort of say, look, it's a tough read, and if they've got low confidence in their own forecasts, that means it's not a clear cut. Hey, it's definitely this, it's definitely that kind of thing. And again, this is why you see the extreme short position of the US dollar peel back a little bit because it's not so clear cut. Everyone thought it was so clear cut because jobs are shocking. Bang, bang, bang. We're going to be cutting. We're going to be cutting multiple times. But if inflation hadn't ticked up, that could have been the case, and it would have been the case, in my opinion. But as I said, the inflation did tick up. It is what they're thinking about. They are sort of waiting to see if that does get sort of passed on a little bit, and we could still see a little bit more of a rebalancing of those positions, just because US dollar has just been absolutely hammered. Anyway, look, short term here and now, a break underneath 30, targeting 66, maybe an overshoot down to 65.80. Under that, I think we'd have to sort of see what's happening. Maybe this little support could give us a bit of sort of indication here as well. It depends with a lot of these things as well. It depends how fast this comes down. If this comes down and falls quickly, you could see an overshoot maybe down to 65.80. Otherwise, I would say, look, a break underneath 66.30. We'll call it 66. Yeah, 66.20s, whatever. Underneath 66.26, call it that. You're targeting 66 as a round number, and then see what happens there, because then you've got this sort of rising support coming in there. You've got the round number. And plus, not to mention, you've just dropped 110 points or so from overnight high, so it's quite a big sort of push back down. So I think sort of certainly if we get a break underneath here, push down, and then maybe we could see, excuse me, a little bit of a bounce. Possibly buyers have another little go through there. And yeah, we'll see how that moves forward there. So onto DXY, which is the big one. And this is the thing that I've been saying. Look, I've been absolutely battered, sort of trying to sort of catch this thing with look limited success. But the advantage, if you could say anything was an advantage for me in this regard, is that I'm not a long-term trader. I'm not trying to hold these things to take them to the moon. But yeah, certainly it's very frustrating, and I have been caught offside a number of times because it's been giving so many sort of little false signals of okay, here we go, we're going, and then okay, a bit of data comes out, we're going, Powell says something, we're going, Trump says something, and it's just been on and on and on. And this is what I'm saying, that like if you look at how far down it has come, I mean, we're talking from the start of the year. Where's the little measure tool here? This is from January here down to overnight's lows. That's 12%. That's like a massive push down. And I think the thing is as well, actually, now that I have a look at this, this actually sort of works out pretty well with this a little bit of an overshoot here, but this pretty much bounced off this support that we had in there. What was I saying? Oh, that's right, yeah, 12% down. And I think sort of like I heard something the other day, and look, I can't quantify this, but they did sort of make a point and sort of say that, look, Trump wanted a weaker dollar, not a weak dollar. And I think that's kind of a little bit of an important sort of difference between the two, or differential, different, whatever, different difference between the two to have that definition. Like, wants a weaker dollar, well, it's down 12%, that's a weaker dollar, doesn't want a weak dollar. And I think that sort of somewhat can maybe cap a little bit of the downside moves through here. Yes, this overshot this move down here. We saw that. But apart from that, that almost sort of bounced right to the cent there. So interesting with that. Okay, so where to sort of from here? Look, there's these kind of like bottoms here is quite a strong reaction pushing up through here. As I said, given everything that I've sort of been rabbiting on about sort of people sort of balancing stuff and that, you could see that obviously if this is the whole move down now, where's this? Drag that to the lows there. This could easily move back up to 99.5. Just based off what we have sort of seen. It's not all based on sort of how the cuts are coming, yada yada. But the thing is that it has been absolutely hammered down. As I said, it's down 12% on the year. They're probably going to see some sort of rebalancing now. We could see, particularly, look, it'd need to prove itself up above a couple of these levels, but we could probably sort of see this thing put in a little bit of a squeeze. And even if it got up to 99.5, which is still quite a big jump from where it is right now, that's still only 23% of the move that we've seen throughout the whole year. So, it's not within it's not within reason that it could potentially push up, test these levels, and then still sell down again and move down even further. And we see some sort of larger range like this sort of forms through here. So I wouldn't be sort of counting it completely out quite yet. And particularly with that kind of little bottom like that, that is a little bit of a springboard bottom. So we'll see how we go. I mean, it's still got a lot of work to do. And as I've said, I've been sort of knocked about a couple of times with this thing. But yeah, certainly I think, look, if we can sort of get back up above, say, 97.40, back up above these lows, maybe over here, yeah, back above 97.40, put it there, we could see possibly a little bit of a sort of squeeze coming to the top side through here. Certainly needs a little bit of work. We're on the 4 hour here as a daily look. Daily, yeah, I mean, look, again, RSI could sort of carry on from here. We are oversold. Technically, the slightest little negative divergence only just got down underneath it, and this is only just above it here, but it is still technically a negative divergence. So we'll see how we go, but I think sort of, yeah, 99.4, I think above there we could probably see a little bit of a squeeze. No gap left here, I don't think, this morning. Yeah, there's a little gap down. It's already filled straight away. So there's no reason to come back should this thing sort of carry on and push up over here. I mean, look, alternatively, this thing could just go and sort of like shoot back down here. But given everything that I've been going on about, I could see an argument for a little bit of a sort of rebalancing of these positions to potentially sort of move it back up here. But 97.4 would sort of spark my interest a little bit more. We got gold, and gold, which chart we're using, this one here, testing this sort of support that we sort of have seen sort of hold. This is 4 or 5 touches or reactions from this now, really. I think sort of underneath sort of, is it this morning or no, yeah, this morning's lows underneath 36.46, we could see a little bit of a cooling through here. So I mean, gold has been on an absolute rip, so there's a lot of sort of profit up on the table here. I did sort of see one sort of, person's take or reasoning for potential as to why, so not as to why, but as to how you could see gold potentially see a deeper, faster sort of correction. And that would be if we saw equities come off. And I guess that sort of goes in line with what we saw in April with that big sell off there. Gold actually didn't do too badly. Silver was definitely bashed a lot harder than gold was back in April. But the idea behind this is that, everybody's like equities are already at sort of highs. There's a lot of calls for things to be sort of, have stupidly high overvaluation kind of sort of points. If that does sort of start to sell off and people need to sort of cover positions, that, they may be sort of selling their gold positions to cover some of that sort of stuff. As I sort of say it, it's kind of like, well, if you're already in these positions, you're just selling for profit. So, it's not like, oh my God, unless you bought in late and you need to sort of cover the positions, or maybe they need to draw that capital in to sort of help the margins. But regardless, that was just one take on it. It seems like it could be a reasonable idea. I think sort of underneath, as I said, 3640, 3640, underneath 40. We could see a little bit of a cooling. This has been somewhat of a little bit of a channel, not so much with the top side here, but certainly these kind of tops where it's a big shoot right up to the top. Anybody that had their stops, they take them all out and then they hammer it down. That's the kind of stuff where you see tops form. At the moment, it's obviously trying to hold this little sell down with a little bit of a bounce of a higher low here. But as I said, if you take out those lows from overnight, that'll sort of be the confirmation that we're going to see a bit more of a dribble down out of the channel, lower low, deeper sort of correction through there. And look, realistically, we could see probably back around 36, and it's not really doing too much. I mean, this is only just this breakout move from what sort of end of August. So basically, sort of end of summer up until that move there, call that the high there, comes in pretty well, 36.14 for a little support area through there at the 23%. So I think that's a reasonable sort of first target. Should we break underneath 40, look for those sort of for those supports to get a bit of a sort of touch up over here and over here. I mean, look, it's still a whisker from the highs. It's just that these kind of tops here, if we do see US dollar run, I think that we could see this sort of pullback here a little bit more. And this would be an interesting line to sort of see what the market decides to do with it here. Do they just sort of bounce it straight back up? Do they try to sort of squeeze it down a little bit more? And look, it's certainly a possibility. It has run very hard, very fast. If people start to get a little bit of sort of a panic on it, you might see a little bit of a faster pickup of the move down here. Alternatively, we go back up above 70, and then you really sort of back up there testing 3,700. But as I said, all things sort of given, I think there's a reason that you could see this at least cool off a little bit more in the short term. Move along, got copper, and copper got up here a little bit, but not really anything of note. If anything, actually, the underside of this sort of previous sort of support, I don't like crossover stuff so much. I do on horizontals it works, but I don't like, okay, here's the thing, and now they become sellers, but on the same angle. I'm not a big fan of that kind of stuff, but look, it is what it is. But as I said, I think copper's just going to have a hard time no matter what it does. I think sort of, I mean, it's so much, like, just got bashed so hard. unless these things were like a stop hunt, and then you see the bounce come straight back up like we did see back in April, this kind of reversal, a little bit of stuffing around, but more or less, you can see that's a V shape. This has been like just kind of a grind flat tire, which means I think sort of like people are just using this to exit. As soon as you get a chance to exit, bang, get a chance to exit, bang. I think that'll continue. I think bare minimum, you need to sort of see what happens down here. I'd like to sort of see that confirmed with another test down here before you could really sort of make a safe assumption that this is a bit of a bottom for now. We do have that sort of long-term support coming in, which is along this line here. Whenever that does decide to sort of show its head, get a touch up, if it does get a breakdown underneath here. So there's definitely some strong levels of support underneath, but at the moment it's just grinding up, and then finding sellers again pretty quickly each time. And finally, just onto the yuan. So it has sort of tested down underneath this level here. If we put it on the daily, I guess let's put on a weekly one because it's going from so far back over here. This is back from 2022. This is a support level here. Look, we have seen this sort of, I guess, dip down underneath this horizontal previously. I think this will be crucial for where we go from here. Certainly a lot of work for it to do. Put an alert underneath here and say it's cooked. All right, time frame. Found buyers kind of where it needed to, but again, it has been absolutely smashed ever since that April sort of tariff board, whatever came out. It's really just sort of been more or less a dribble one way. So look, it is coming into a bit of a confluence around this area here. This is where we've sort of been targeting for it. I mean, how far have we come down here? 4.6%, which doesn't sound like, I mean, it is a lot with FX, but with this pair, because it is a very slow mover, I mean, if you go back to June 2023, it's more or less short of this little overshoot down here, been in like a 3% band. So it's not a big mover at the best of times. So be interesting to see if this does hold through this zone here. I think that'll be a very interesting sort of place to sort of see where this goes for the end of the week. If they decide to sort of carry this thing up a little bit more, maybe we see the cooling off that we've been sort of looking for gold. Like I've been harping on that, and this is the thing. I've been saying this stuff for a while, and I've been slapped about a couple of bits. I shouldn't laugh, but like it's all you can do sometimes. When you're sort of yep here, and just continually fails and fails and fails. But this is on the daily here, and we're seeing quite a strong negative divergence through this. Like the other ones were like, okay, we got a little bit of a negative divergence. I'd be happy to sort of say that's a fairly strong negative divergence coming into that support area. And this is the thing with the technical analysis, if you can link a number of things together, the more you can link together, the stronger the confluence, the higher the probability of these sort of moves kind of playing out. You're not just going, hey, this is one thing that happens to line up with this. Because think about it, there's so many market participants. Not everybody's looking at the same thing, trading the same thing. But if you've got a section of the market looking at a price, another section of the market that analyzes it and looks at the same price, and then another section of the market looking at it and they're adding it at the same price as well. Well, all of a sudden you've got quite a large segment of the market that's looking at that one position. That's when there's a higher chance that you may actually get some sort of reaction at that level there. But look, it's like a lot of the US dollar stuff, it's got a lot of work to do. But negative divergence very much sort of coming down into this last area here. We got a bit of a confluence of supports on a higher time frame weekly above 13.5, above 15, then we could see the squeeze. That's where you really need to get above 15, and we could be sort of on our way back up towards that sort of 720, which, if we do see that, you will see pressure finally sort of come onto the Aussie, because Aussie has just been absolutely ripping. I mean, it hit to new yearly highs. And look, it could still hold those levels for sure. But as I said, this is what I'm looking at in terms of whether this will hold, whether this will actually move. If this does move, I think that's going to make it pretty tough for Aussie to stay above. Just on Aussie as well, we have a little look at these sort of rates here. This is the the 3 year over the 10 year Aussie. Typically, you want to see this thing moving up, and you'll see a bit of Aussie strength, and pretty much goes in line with what we've been seeing here. Aussie sort of being kind of more flat sideways, has been moving a little bit, seeing a bit of a push on the breakout recently, but it is coming into its resistance through here. And more specifically against the US dollar, this is the 10 year Aussie against the 10 year US, and this has been in a band for a number of years. As you can see, it's always sort of had fairly good responses. We've seen a bit of a divergence with this kind of stuff recently, because typically you'd see the rates appreciating, or like they said, the ratio appreciating, and you see Aussie strength. As you can see, Aussie went from this point down here where Aussie was at to when it touched up here, it moved 9%. Coming down, it moved 11%. This year, which are these red lines here, we've seen it move up 4.6%. That's okay. I mean, we know that Aussie's been a little bit weak with it all, but we've seen the rates actually come back down from this level here to down here, and it still appreciated. And then when it went from the lows down here up to here, it actually sort of declined 1.2%. So, it's interesting, but it sort of goes to show that obviously Aussie is slowing a little bit through this year, and that the normal sort of correlations and the way that things should be acting are off. And I think that the takeaway with this particularly is that rates aren't the main driver. Maybe not the main driver, but it's not the sole driver. Because if rates, we know that this works. We've seen that this works. But this year, we have sort of seen that things have been a little bit off kilter. And that's because you've got the other sort of forces at play sort of driving these markets as well. All right, that's it from me.